From Barangaroo Studios, this is the COB, brought to you by eToro. Invest in ASX shares with $0 commission.
Hello. Welcome to the COB, all the stuff you need to know about the day in business markets on the 15th of June.
Absolutely. And, well, not a bad performance today, was it? Considering we had that really strong jobs data, which, you know, the market sort of wobbled a bit, but then recovered.
It sure did. We've got rate calls. It's one of our key themes. Rate calls galore. You know, the RBA is going to have to be more aggressive. The economy is still super hot, at least the jobs market is. We had a good conversation with Bjorn Jarvis, who's from the ABS, and he was pointing to record high participation rate, you know, the creation of full-time jobs and hours worked as well. Yes, there was a little bit of an uptick in underemployment, but he said, you know, historically and comparatively speaking,
it's still really so strong. Yeah.
I wonder if that uptick in the market had to do with further stimulus coming from China.
Yeah, I'm not so sure about that, because looking at the materials and energy stocks, they really didn't lead the market today, which is quite interesting. We seem to have more followed on from Wall Street's lead in terms of information, I should say NASDAQ's lead, information technology going for a bit of a run, and also financials, and interestingly enough, real estate, because Charter Hall Long Whale REIT actually came out and downgraded some of their valuations.
But so why did we see the REITs higher?
Because I think there's an expectation that a lot of them are trading so below their NAVs that it more than takes into account the fall in the commercial property space prices. That was something I was reading today. Yeah.
Well, I had lots of conversations just in keeping with the tech theme about, well, I had a great chat with Monique Katecha, who was joining us from Insync Funds Management. He gave me the AI stock that he's chosen to invest in. I know that NVIDIA is getting all of the attention, but there are other exposures out there. But he did say beware, you know, with every sort of mania, you do get some areas where you can see bubbles forming. So he's still going for quality. You know, you can find these companies that make a lot of money, that have good balance sheets. And so that's something that's up online now. And I also spoke with Jonathan Moorhead from Maple Brown Abbott, who gave me his pick for the AI theme in the emerging market.
Oh, so,
have
to watch that one.
Yeah, so there you go. Our three themes: that hot jobs market, the China stimulus, watching for rates here, and of course we haven't mentioned, I can't believe we've gone this long without mentioning the Fed.
Well, hasn't the Fed been mentioned till the cows come home? It seems as though a lot of, interestingly enough, like, you know, data dependent, not data dependent, you know, another 50 basis points. Another guest who I had on was sort of saying, you know, 1 month on, 1 month off, they're going to just keep on raising rates. I mean, look, clearly the market wasn't phased. That was the bottom line. The market sold off and then they came back, and lo and behold, NASDAQ is off to the races again. So, you know, there's a lot of momentum there in those US markets.
Had a good chat with Daniel Solek from Capstream Capital today, and he was very much calling this Powell's pause, not the Fed's pause. He thought it was incredible, even though we said that those dot plots were all over the place, that there was no dissenters. Which he said under any other Fed chair, you know, there would have been dissenters, and likely, you know, potentially there might have been those, because we have heard a lot of hawkishness coming from the Fed, but he reckons that Powell's kept them all in line. That interview is up online, ausbiz.com.au. Shall we do a tour of these sectors that performed today? We were chatting about Infotech. There you go.
WiseTech and Xero continuing to run there. Doesn't Block have earnings out this week, or maybe there's some update?
Sort of a strategy day.
Yeah,
or something
I'm not
like
sure,
that.
but and Computer Share obviously not rallying because we haven't seen a huge movement in yields. And
REITs are out there. We talked about the REITs.
Yeah, like quite strong there. Goodman Group and Mirvac. What's interesting is those US housing stocks, the housing developers doing really well. And I'm just wondering whether that theme that there's been such underbuilding might start to catch hold in Australia. And maybe that's why we're seeing some strength in Mirvac.
I did notice that James Hardy did really well today. I think it's part and parcel that Fed pause. And then, there's still supply issues there as well, even though, you know, nobody's really moving in the States, because if you're locked in at such a low rate, why would you choose now to move, you know, when you've got to take on a much higher mortgage rate at this stage? The banks did all right today, all in positive territory.
Macquarie, very strong today.
Very strong. I didn't notice that.
No, I noticed, but I couldn't find a reason why. But yeah, interestingly that they're finding a little bit of love as well. Maybe it's higher for longer interest rates. And healthcare. Interesting.
CSL.
Yes, but I think it's really interesting. It's holding that $280, and lots of brokers came out with revised numbers. They've brought them down, but lo and behold, most of them still have really positive price targets that are well below this level, and they all have a buy.
I think Citi cut theirs from 350 to 340, and I thought, well, if you go by that, then I know it's a crude way of putting it, but it's a share sale today for CSL. And
exactly.
Josh Barker from Macro Capital said that they're quite happy to be buying a bit more CSL at these levels. And I think in sympathy, we're seeing some of those healthcare names down. You mentioned energy. Energy was not a performer.
Yeah, not weak. Well, Whitehaven, interestingly, a bit of a bid. Look, those China numbers, we had a really good chat with a guy, Andy Maynard from China Renaissance, and he gave a really good in-depth dive into what's going on in China and whether foreigners are going to start buying the Chinese market, which has been a huge underperformer. So it might be worth checking out that, because it clearly has implications for Australia in energy and also iron ore miners.
Yeah, so if we take a look at what happened with the miners, they were pretty positive today, sector-wide, although gold, not so much. Okay, so that's a bit of a tour around the markets. Let's get to some of the corporate stories. Look, a little quiet on the corporate front, but taking a look at these companies, we did have Retail Food Group. In fact, I spoke with the incoming CEO. So new CEO appointed, ended up by about 2%, even though it warned that sales are slowing in the second half. They expect still tough trading conditions to continue, he said, for the foreseeable future. But he's pretty juiced about the fact that they've reached a turning point. They're now going for growth, brand rejuvenation, all the rest of it. I also thought it was interesting to hear him say that labor is easing for them.
Oh, that's good.
So after being just dismal in the wake of COVID, he said that they are getting a bit of relief on that front.
Yeah. Now, Australian Ethical, they actually had a trading update, very, very positive. Their funds under management continuing to move higher in the 5 months ending May, and looks like that probably is a bit of an earnings upgrade that they came through with, and I think they've reached FUM of $9 billion. So that stock
punchy.
Very, very punchy. So real turnaround there. And I think this was one of Claude Walker's favourite stocks a while back, and it has been sold down a lot. So investors probably enjoying that almost 13% pop today.
Lovisa, I put on this list, I know that it's not technically corporate news, but we did have Citi
downgrading,
trimming the price target to $16 from $25.75. So that's quite chunky, downgrading it, as you say, to sell. So again, just saying that the pace of the store rollout could provide some offset to weaker underlying sales, but conscious of the risks. That slight selection criteria might be somewhat less stringent. Staffing issues may impact margins. And again, just talking about that minimum wage decision. So it's just really interesting to see a broker turn on Lovisa, which
absolutely,
has been a favorite.
Absolutely.
And DGL, that actually had a trading downgrade coming through. So we are in that touchy time between report, or ahead of, I should say, of reporting season. We're in confession season. So this is something that investors really need to be aware of, and we're keeping our eye out for it each and every day.
Coming thick and fast. I mean, maybe a good segue given CSL's update into that's not stock of the day, sorry, we've got stock of the day first.
It's IAG. So yesterday it held its strategy day. Look, a lot have been saying that the insurers are, a way to get a bit of defense in your portfolio, particularly as rates rise, and they've got some pricing power. IAG was talking about some pretty punchy premium increases.
Yeah, housing insurance is going to to go through the roof.
I thought I would be doing my my job, calling around maybe. In not saying I'm with IAG, but gosh, gotta look out for a deal. Anyways, it was the stock of the day. Let's listen to what our expert guests had to say.
If you're a short-term trader, you might want to take a guess on what the next 6 to 12 months might do. I'm a long-term investor. I don't try and play the short-term game. So if you ask me how likely is IAG to make money over the next 5, 7, 10 years, given that volatile pricing market, I got to say I'm not entirely sure. I don't love the price at 17 times earnings, though, even if they do manage to get slightly higher profits. Again, unless you're trying to trade that through. As a long-term investor, I'd want a cheaper price. I don't think I'd probably run out to sell them. If you own them, a 2.6% dividend yield, you're probably a more conservative investor. Maybe you like the income, maybe you've got a diversified dividend stream. If that's the case, I wouldn't necessarily say you should rush out and sell the shares, particularly if short-term profits are going to be better, but I wouldn't be buying either. Probably a solid hold for me.
Longer term, it's been a poor investment, but if you've managed to get it in those 12 months, you've been in the sweet spot. And I think the share price can continue trending higher, but I think we've seen the better part of the gains. And as Scott mentioned, it's not cheap anymore. So I think as a hold, I think you could continue on and see a little bit more upside, but buying it at this point is a bit risky. I do believe competition can increase down the track. And look, with insurers, I've never been involved with insurers because they're always one natural disaster away from having an issue. So look, I think with those risks, the price doesn't factor in those potential risks. So look, happy to hold, but buying up here is a bit risky.
Let's get straight to our featured guest, Fraser McLeod, who's joining us from Shaw and Partners. Fraser, good afternoon. Look, CSL, is this a bit of a bargain right now?
Oh, look, I think it probably is. Thanks for having me on. I think the question to ask is, is CSL still the natural home for growth investors within the healthcare sector? And the answer is probably yes. There's a few things that you can forgive CSL for yesterday. Obviously, big dramatic move yesterday. It's down again today. In order for CSL to claw back to its recent high, then we would really need about a 12% price move. So it's had a fair decline already. What you can forgive, however, is that a lot of the short-term problems that they flagged were foreign exchange. A lot of the costs for CSL, by its very nature, is in US dollars, and much of the revenue, probably about 40% of the mainstream core product, is not in US dollars. So that hurt. The upside always with CSL is, well, what have they got for the future? And they'll never tell you exactly because they can't. But we do know there are some key incredible drugs on the horizon potentially. There's a few catalyst points over the course of the next 12 months, and once they start talking about how they're going to commercialize these drugs and what the margins could be in them, that's really going to be key so that investors can get their confidence back. But time to write off CSL? Certainly not. Everyone had a bit of a heart flutter yesterday, but no, take an aspirin and buy the stock most probably.
I love that. Take an aspirin and buy the stock. Excellent. In terms of ResMed, Fraser, what's been going on? Because that whole thing about them picking up market share from Philips with all the problems that Philips have been having, is that continuing?
It is, yeah, it's working. So ResMed's been a core portfolio stock from us that we added around about 12 months ago. And so just to recap, there was a disastrous impact on Philips, who were pretty much between CSL and Philips, they had the market for sleep apnea products, those masks that blow air through your windpipe as you're sleeping, and allow people a bit of relief from sleep apnea. The Philips product had some terrible problems. They didn't perhaps quite fess up as soon as they should have done, and they'll be in for some big penalties, some big regulator restrictions into the future. And it's really opened up the market for ResMed. So they are seeing the benefit. They're also seeing the benefit just simply from the fact that there's huge tailwinds there. So aging population, a lot more diagnosis of sleep apnea really plays into their hands, and so certainly, probably only better things to come. There's no easy solution for Philips in order to return to the market.
All right, let's talk blue sky, shall we? We had a big upset last week with Paladin when it came to Namibia. The share price has gained all of its lost ground, I do believe, when it said that it was likely to be unaffected by any changes there. But I know you've been a long-term believer in uranium, Fraser.
Sure.
State of play now.
So yeah, it was 2 weeks ago, almost to the day that the was a story going around markets, and Paladin, which has owns 75% of the Langer Heinrich mine in Namibia. There was a small political story which mushroomed suddenly, panicked the market, and suddenly Paladin was down 20%. Everyone thought that the Paladin was going to be nationalized, and really the market was in full panic mode for a few hours. Settled. The story really was diluted down. In reality, it wasn't anything to worry about. Even the Namibian government had to come out and say, look, we're not intending to nationalize anything quite now, quite at this point. In fact, we probably won't in the future. There's no change in the laws. We don't have some executive decision that we're suddenly going to make. And so market calmed. But all the time that this was happening, of course, the uranium price in terms of the spot price and demand keeps increasing. And Paladin's worth more than it was 2 weeks ago. Before the fall, we've seen a 40% rise in Paladin over the course of the last 2 weeks. We've seen a 40% rise in Bannerman over the course of the last 2 weeks, which is the other big Namibian player listed on our market. And even Boss Energy, that doesn't have their miners here in South Australia, even their stock is up about 20% from 2 weeks ago as well. So the story there is one that is one of our certainty, and the certainty comes around by demand is certainly becoming higher, and the uncertainty is that no one knows where the supply is going to come from. So we are reaching a crunch point. These stocks could go a lot higher.
Wow, there we go. Now let's move to travel and Hello World. I was just having a look. Shaw and Partners was saying there was the potential for an upgrade in terms of earnings a couple of weeks back on that stock. Is that one that you still like, Fraser?
It is. Look, it's been a great trading stock for us over the course of the last year, and the stock can move. Travel World is maybe a name that people would remember because it's only been around for a little while. In that it was an amalgamation of Jet Set, Travel World, and Harvey World Travel, who created Hello World, code HLO. And Hello World previously, prior to COVID, was a $6 stock. Very quickly went to a $1 stock. Then, after COVID and after demand came on board again, then was traveling up at $3. In recent times, even back in January, it was trading back at $1.50. But what is certainly clear is demand for travel is almost for some sections of our economy. Well, it's not discretionary at all. It's almost an essential. And so if it comes down to this, for the customers of Hello World, those customers are not turning off demand. They're not price sensitive. In fact, really quite the opposite. So those who can afford to fly, especially for international trips and more luxurious trips, then they're going to fly. And on a recent poll just last month for the airline industries worldwide, 77% of people say we're going to travel more over the course of the next year than we did over the course of the last year, and almost no one is saying that they're going to travel less. So we're almost back up at levels of travel globally for airlines of passenger numbers that we were prior to COVID, which is incredible. Prior to COVID, we were at 4.5 billion travelers. We're currently around 4.35, so we're almost there. We are seeing earnings upgrades in certain areas of travel, especially around premium travel. And absolutely, a company like Hello World is, as a travel agency, is trading on really still quite a big discount to its peer group. So it's a better company than corporate travel. It's for listed entities like Webjet or Flight Centre. It's trading on around about a 30% discount to them. So we like them a lot.
Fraser, it's been a pleasure to have you join us to wrap this session and give us some of your thoughts as well on specific stocks. Thank you.
Good. Thank you. Bye-bye.
All right, let's get to some of those leaders and laggards. I always like doing this, Danny. Just gives us some perspective on, how much of the flow is news driven and how much of it is related to sentiment or some of the broader, narratives that are out there. Let's bring them up on screen, please. And we've got coal. I've got to look into why we're seeing
coal moving. Exactly.
Yeah. Okay. So because that's New Hope. That's Horizon that ships coal.
Absolutely.
That's Coronado. Fortescue Metals there up 3%. So
maybe
look, I think it is China stimulus.
Yeah.
I just can't see why it wouldn't be.
Yeah.
Because not only that, but don't forget that we've got major sort of authority meeting, Plivitro. Oh, I just lost the word. That happens in July. Anyways, it's when they set a lot of their economic agenda,
goals for the year
and
ahead,
so that is another time that we could potentially see more stimulus rolled out. We've also got a PBOC meeting that comes on June 20th, so that's next week. So softly for stimulus so far, but whether or not we see more significant stimulus come, because this reopening in China is not going as it should. And there's our stock of the day there on the screen.
IAG. Yeah, up over 4%.
That's pretty punchy percentage points gains.
They are. They're very punchy indeed. What I think is quite interesting is that Mineral Resources is not following the likes of Fortescue up. So I think that's actually quite interesting. But shall we have a look at the laggards?
Yeah, let's do that and see what was holding this market back. Imaging, another day, another mention.
Lynas, I do know that there was a downgrade, I think, from UBS. I was having a look at that earlier, and maybe some profit taking coming into that stock with some of the, what do you call them? The NDR, or those, critical minerals that they produce. The pricing coming down there. So a bit of profit taking there on that one.
I noticed right when we sort of got on air this morning, if you look at Pilbara, that the lithium miners were all really sort of underwater, as were the gold miners today. I don't know. I don't remember reading any news associated with it, but it's something to keep in mind. So Imugene down by 7%. In the small to medium cap space, this is where we've got a few stories happening as well that we can follow. There's Aussie Ethical.
Yes.
We don't always talk about Aussie Ethical, but it's worth it when it's up by 13%. Legacy Iron Ore, boy, I'm not familiar with that company.
Mind you, when you're 2 cents, that's probably a good
true.
reason why you are familiar with it.
There's some
44%.
I was just ticking. It's got a joint venture. So the Hancock has Prospecting executing a lithium earn-in and joint venture with the company. I believe it would be WA, wouldn't it?
Oh, okay.
Yeah, Hancock has committed $4 million, so that's on Gina Reinhardt.
Right.
Flipping the page, and I can see a DGL will be on here most likely. Down by 18%.
And Appen getting
I'll be speaking with the CEO of DGL in the small caps tomorrow, so we'll find out what's going on there and when they're going to be able to turn that ship around. And EBR Systems is off by 8%. So there's a little look in to what moved this market today. Tonight, central bank action is not over.
CB, isn't it? Yeah, they're on the move potentially, which I think there's what the expectation is, isn't it? That they are going to raise.
Had a good chat with Tim Baker today from Deutsche Bank. If you want to listen to that, it's up online. But he said there's not a lot of ambiguity about what the ECB will do. And we also get a bit of data out of the US as well.
Retail sales,
and initial jobless claims. So they were starting to show last week signs of ticking higher. So we'll see what happens this week. And then the Bank of Japan is the next central bank.
Oh gosh, what a week,
tomorrow.
isn't it? And what else have we got? US consumer confidence, but that's later on in the week,
Well, that's the University of Michigan one, so that's Friday.
Okay. Right.
And then tomorrow I think you'll be speaking with the CEO of AGL
Absolutely,
Energy.
that's very exciting. I'm looking forward to that. I think they're rolling out a whole lot of charges, aren't they?
They are. I think they did a deal with BP, and I was chatting with my father this morning in Canada, and he's just bought an EV, and I thought, you know what? If an 80-year-old man can call me proud to have bought his first EV, I thought that's a sign of the times, isn't it?
That's super cool.
And he's very proud because you get a license plate with green letters. So he said, my neighbors will know.
What did he buy?
It was, I don't think we have them here. It was some sort of a Nissan. And I can't remember.
Okay.
Yeah, they've got so many more.
We have the Leaf. Yeah, we've got the Leaf.
Do we hear?
Yeah, they're great. They're little ones, and they're really affordable.
Yeah, well, that explains why my dad got one. Second car to toot around in. So, anyways, that's just a little anecdote there. How do we get onto that? AGL, right?
Yes.
You'll be speaking with AGL.
The CFO tomorrow afternoon, so really looking forward to that conversation.
All right, we've got a sleep to get through before now and then, and the ECB as well. So we look forward to seeing you. We'll be on bright and early tomorrow morning. Have a good night.
Have a good night.
The COB is brought to you by eToro. Invest in ASX shares with $0 commission.